Welcome to Hidden Empires, the channel that uncovers the untold stories of self-made billionaires. From toy sellers to tech visionaries, from forgotten failures to global empires, we reveal the strategies, risks, and turning points that built fortunes.
I'm always on the hunt for great stories about overlooked origins. You never know where you might find them. This story starts in Los Angeles in 1943. That's when Don Hankey was born, the son of a well-to-do stockbroker. So he grew up understanding the basics of finance, but his first real career move wasn't on Wall Street. It was at a Ford dealership in downtown LA. By his mid-20s, he had bought a controlling stake in the dealership, and there he developed a knack for spotting customers that other salesmen ignored, the ones with poor credit. Then came the 1970s, a decade of economic uncertainty. In the middle of that decade, two major events shook the country. The first was the OPEC oil embargo of 1973, which cut off oil to the US and caused gas prices to quadruple almost overnight. The second was the recession of 1974. Unemployment rose to over 8% and inflation cracked 10%. For many Americans, buying a car became a luxury they could no longer afford. Now, the auto sales business is cyclical. Every few years, there's a downturn, but this one was different. Most folks couldn't get financing because banks were nervous. Many Americans couldn't qualify for loans. Banks saw these folks as too risky, so they simply didn't get approved. For most dealerships, that meant fewer sales and shrinking profits. But for Hankey, it was an opportunity. He saw thousands of customers who couldn't get bank loans standing in front of him, so he offered them loans himself. Now, these loans weren't like the ones you or I might get. They came with high interest rates to compensate for the risk. But Hankey didn't just slap on an interest rate and hope for the best. He built systems to manage risk. He understood that most people aren't crooks, but desperate times call for desperate measures. So if someone couldn't make their payment, he'd work with them to find a solution. Unlike traditional lenders, he didn't just call in the debt collectors if someone missed a payment. He'd try to work things out. And if that didn't work, he'd repossess the car. But that was a last resort. The problem was that no one wanted these loans. They were too risky. So Hankey did something crazy. He kept these loans on his own books instead of selling them to someone else. That meant he controlled the whole process. If things went south, he could manage it. And if things went well, he'd collect interest payments for years. Slowly but surely, he built a reputation in the industry as the king of subprime. In 1972, he founded Westlake Financial Services to expand this business model. He continued working with dealerships to finance cars for people with low credit scores. The company grew steadily throughout the 70s and 80s. Then in 1986, Hankey took the company public. By the late 90s, Westlake was one of the largest auto finance companies in the United States, but that doesn't mean Hankey stopped innovating. Not by a long shot. In 1999, he founded Hankey Capital to offer insurance products. Then in 2002, he founded Hankey Holding Group to invest in and manage car dealerships. In 2007, he founded Auto Credit Express, an online platform that streamlines auto lending for dealers. And in 2015, he launched Hankey Consumer Finance to offer personal loans. Through all of these ventures, Hankey remained focused on serving customers that banks ignored. He saw value where others saw only risk. In 2008, while other lenders collapsed, Hankey tightened his underwriting. But while others froze up, he kept lending. He captured market share when competitors ran out of capital, and as the economy recovered, Hankey's loan book grew along with it. Today, the Hankey Group manages billions in assets, and Don Hankey's personal net worth exceeds $7 billion. He's still relatively low profile compared to other billionaires, but his empire touches hundreds of thousands of car buyers each year. He remains focused on serving customers that banks ignore. Here's the thing. We tend to think of risk as binary. We think of something as either risky or not risky. But the truth is that risk is a spectrum. And the more you understand about the risks you're taking, the more you can do about them. Like Hankey, you might be able to turn a risky bet into a profitable one. That's all we have time for today. Thanks for listening.
We hope that you enjoyed this episode. Please subscribe, like, and comment so others might find and enjoy these videos. Go to description below for more resources and information. Thanks for your time.